Every trader thinks markets move on truth, on data, on numbers, on facts. But what if those facts aren't facts at all? What if the most powerful market weapon in the world isn't interest rates, or central banks, or oil, but economic data itself? Because behind every market move, behind every rally, crash, or policy decision, sits a number someone chose to release and someone else chose to believe. Welcome to the hidden war of economic data. The inflation numbers, GDP growth, unemployment rates, retail sales, they look objective, scientific, clean. But the deeper you go, the more you realize they're built on assumptions, revisions, and political incentives. And in today's markets, whoever controls the narrative around those numbers controls the flow of trillions. Let's start with inflation. When the U.S. government reports inflation at, say, 3.2%, what does that number actually mean? It's based on a basket of goods, weighted by what officials think the average consumer buys. But here's the catch, that basket changes regularly. When prices rise too fast, the basket gets adjusted. Substitutions are made. Steak becomes chicken. iPhones replace older models. Hedonic adjustments discount inflation by claiming newer products are better, even if they cost more. The result? The inflation rate might look stable, even when your bills are exploding. This isn't new. It's been happening for decades. In the early 1980s, inflation methodology was changed to make the numbers smoother. In the 1990s, housing costs were redefined as owner's equivalent rent, which doesn't measure what you pay. It measures what survey respondents think they could rent their house for. So while the official CPI says inflation is under control, the lived reality on the street can feel wildly different. That's not an accident. It's narrative control. Because high inflation damages trust in government and crushes bond markets. So there's an incentive, subtle but powerful, to make it look manageable. Now move to GDP. Gross domestic product is supposed to be the scoreboard of national strength. But GDP can rise even when real prosperity falls. Governments can juice GDP with spending, subsidies, or even disaster relief. In some countries, rebuilding after a hurricane adds to GDP. Destruction becomes growth. Even the US and Europe revise GDP figures multiple times after they're published. Markets react instantly to the first release, the flash estimate, but that number can change dramatically later. By the time the truth is known, the money has already moved. Then there's unemployment. The headline rate, say 4.1%, sounds precise, but it excludes millions of discouraged workers, part-timers, and gig workers who want full-time jobs. The official rate, known as U3, is the tip of the iceberg. The real number, U6, often doubles it. Yet politicians and central banks always quote the smaller figure. Why? Because optimism fuels confidence. Confidence fuels markets. And markets fuel power. You see, data isn't neutral. It's strategy. In 2020, during the pandemic, global GDP figures were massaged through emergency accounting. Central banks called inflation transitory, even as monetary supply exploded. In 2022, governments changed how they calculated real wages, just as paychecks began losing value to inflation. And in 2023, China's economic data suddenly stabilized, right when global investors were questioning its credibility. Coincidence? Or choreography? This is how economic data becomes a weapon. Not to deceive, but to steer. Central banks use data to justify policy. Governments use it to craft narratives. Media uses it to move sentiment. Traders use it to profit. And somewhere in that chain, truth becomes a tool. Here's how it works in practice. A weak inflation print. Markets rally. A surprisingly strong jobs number. The dollar surges. A miss on retail sales. Bonds rally on hopes of rate cuts. But behind each number is a methodology, often revised, sometimes opaque, always influential. In 2023, analysts found that seasonal adjustments had exaggerated job gains by hundreds of thousands. In 2021, GDP growth was overstated due to statistical carryovers from stimulus. And in nearly every major economy, inflation was revised down after elections. These aren't random. They're signals. Because in a data-driven world, perception is reality. When the U.S. Bureau of Labor Statistics releases a jobs report, Algorithms trade billions in milliseconds. But those algorithms don't check the data's credibility. They react to the headline. That's the game. The headline is the weapon. Even central banks, the supposed guardians of truth, play their part. They rely on lagging indicators. They quote core inflation instead of total inflation, excluding food and energy, as if those don't matter to consumers. And when the data no longer fits the policy, the definitions change. This happens globally. In Japan, decades of deflation made data manipulation subtle, redefining what counts as growth. In China, local provinces compete to show higher output, leading to inflated figures so consistent they defy statistical randomness. In Europe, revisions to GDP are timed to support bond auctions or policy announcements. Every region has its narrative, because the data isn't just numbers. It's national branding. Think about it. If a government releases weak growth data, its currency falls, its borrowing costs rise, and investors lose confidence. But tweak the methodology slightly, shift a seasonal adjustment, change a base year, or alter a definition, and the story changes overnight. And that story is what markets trade on. That's why traders don't just read the data, they read the incentives behind it. Who benefits from this release? Who gains from this surprise? Why did this revision happen now? Once you start asking those questions, the illusion fades. You realize markets don't move on truth, they move on belief. Belief in the story the data tells. That's why the dollar rallies on bad news, why stocks fall on good news, why traders react not to reality, but to expectation. Economic data is the ultimate sentiment weapon, wrapped in the illusion of precision. It doesn't have to be fake to be powerful. It just has to be framed. And in that framing lies control. So the next time a jobs report beats expectations or inflation comes in hot, don't just trade the number. Ask, who needs this story to be true? Because in global finance, data doesn't just measure the world, it moves it. That's why economic data is the most manipulated market weapon on Earth. If you found this eye-opening, make sure to like, comment, share this video with others who love uncovering the truth behind the markets, and subscribe for more deep dives into the hidden machinery of global finance.